don't fall in love with just the technology, which I did do. I think you need to fall in love with the problem. So don't worry about the chain, the token, this particular network.
Yeah.
It's around trying to actually solve the problem. And that's the boring work and the hard work, the regulated work. And that needs to be the foundation for everything you do. So I think that's a lesson learned. And scars, I've definitely got scars in that space.
Welcome to Tokenized, the show focused on stablecoins and the institutional adoption of tokenized real-world assets. I'm Simon Taylor, your host, author at FinTech Brain Food, and head of market dev at Tempo. And joining me again is my friend and co-host, Goldi, SVP of Payments and Network at Fireblocks. Talk to us about Stablecoin Stories. What is it? Why? Why does it exist? Why?
Well, it exists because people need to hear the truth, Simon. People had enough of PRs. They had enough of LinkedIn. They don't want to read fake Twitter feeds. They want to know what's the real deal behind the stories. And they want to know what's the story behind the story. And this is why today we brought a person who has been here for a long time in our space. He's going to tell us a lot of good stories. This is Pritpal Shokar from Thunes. He's now the head of product for Thunes for digital assets. And we're going to give you, Pritpal, the fifth degree on what your story is.
Heck yeah. Before we bring Pritpal up, I just want to remind viewers and listeners that views and opinions of our contributors today may be their own and might not reflect those of the companies they represent. Please don't take anything we say as tax, legal, or financial advice. And of course, I have to thank our sponsor for this show for making it possible, Fireblocks. Pritpal, give me a little context on you. Give me a little context on the stablecoin offering at Thunes. I want to know a little bit about your background. My show notes say you're a bit of a crypto OG. And I want to know how you find yourself at Thunes. Give me that story.
When did you buy your first Bitcoin? That's what I want to know. And how much money do you have in your pocket right now? But you answer whatever you feel comfortable answering. Pritpal, please.
Yeah, sure. Yeah, just in case I got some cold stories tucked away, I'm going to keep that one silent on my end. Yeah, thanks for having me on, guys. So just a little bit of backdrop. So I think before I got into the crypto space, all started really when I was actually working as a cashier. So back in the retail banking, that's when I first started handling money, such as actual physical money over the counter. So, deposits, withdrawals, transfers. And what I was doing back then was I was actually, updating a ledger, which was the system ledger at the time. And I recall actually a specific moment when I was working, and in one of the branches that I was working in, the systems went down and we were offline. The decision was made to carry on processing transactions, and we recorded transactions by hand on a piece of paper, and customers just carried on depositing, withdrawing cash, and the trust was in us, right? So they trusted us just to update the systems, and it was all based on trust. And afterwards, we had to, reconcile and balance them. Fast forward a few years, as I've gone through my career, one of my friends forwarded me the Bitcoin white paper, and I was fascinated from there, and it kind of came a little bit full circle because this was a different system. It was still a ledger at heart, but it removed this reliance on all these individuals at heart. And it was all around this concept that was being shared and actually encoded as well. And I think for that's what struck a chord with me, because actually it was a ledger distributed and updating by itself. And there was no longer individuals on a teller system at play. It was global by default. And I think that's when I became fascinated with crypto, really. And since then, I've not really looked back.
You got the global by default bug and the white papers bug, and it's one I kind of know well, especially if you had to be dealing with the back end of a ledger. It's as every bit as ugly as it sounds. So take me back to those early days, because payments has been this killer use case, but it just took so long to materialize. So what does it look like as Pritpal, who's got this bug for 24/7 and not seeing it coming, but seeing speculation happen, but then you're sort of being a payments guy?
Yeah, so I think it's quite unique in my role because I'm still at the cusp of blurring the boundaries between the crypto space and the TradFi space. And I think what crypto's got right from day one is the concept of settlement, real-time settlement. And what I mean by that is in the TradFi space, we still see it as more of a messaging infrastructure layer. So messages move, but the value doesn't actually move. It's so the settlement isn't moving. So if I think about, again, right when I was updating the records on those systems, nothing was moving in reality. It was just data being updated. So I think, again, being always on 24/7, 365 by default, and the actual fact that money is moving on chain, I think that's quite different. And I think at the moment that gap now is slowly decreasing, but it's still there. And then that's where the challenge still lies, which is in the blurring boundaries between the old world and the new world.
And you've been through, I mean, many cycles, I think, right? Like, how many crypto cycles have you been through, Pritpal, by now?
I'd say at least 3 in my time.
Okay, and I'm sure you have the scars to prove it. I've been through 3 or 4. I don't know. I probably tried to, forget about them. But obviously, I feel that every crypto cycles gives you more clarity, right? Like there was the 2017 cycle. We learned, never to give people we randomly meet in the toilet money for investment for their ICO. Great. Then we had the cycle of 2021, 22. I think we've learned never to overpay for JPEGs that are offered as NFTs, right? But like, give me like one of those insights that you've learned through those cycles.
Yeah, sure. So first of all, I agree we are in a bear cycle, but this bear cycle is different, and we've seen it because in this new world, the volatility in the market, a couple of percent, single digits, people are scared. You've been there, right, Goldi, and I'm sure you have, Simon, right? We were double digits volatility. That's when it was scary. So I think it has baselined a little bit, and I think that's because the institutions have come on board. And also the regulatory clarity. I think that is helping it kind of subside. The difference for me with especially stablecoins is I think that it's actually breaking away now. So typically the crypto volatility has been around, speculation use case, and the volume has been pure trading. Now we are seeing a little bit of decoupling. I've seen it, where transfers now and on-chain activity, while it is still relatively small, and we know it's only 1-2%, that is increasing, and it's actual real world use cases. So treasury management, payroll, remittances, we are seeing that. And also even during this so-called bear market, we're seeing a lot of more building solutions. So I'm sure we'll cover some of the announcements today, and you guys are very close to it yourselves. People are building, solutions to solve real problems. And that's something that we weren't doing before. And you mentioned the NFT fad, right, Goldi? I remember being at one of the Token 2047 events, and everyone just wanted profile pics, right? And thankfully, we've moved on from there. I don't think that helped our industry, but we have moved forward. Yeah.
No, but I mean, I will say that the parties were better when NFTs were the hype because, they were just very different. But obviously, yes, thank God we've moved on from that. We're no longer, we're more about utility. And I can tell you that's the truth because 65% of the volume right now on our platform, on Fireblocks, is stablecoins, right? And we move about 15% of global blockchain movement. So it definitely changed from 8% 4 years ago to 65%. That's about $4 trillion right now. So yes, very much moved. And I think this is why companies like Thunes are here, right?
I don't like the implication, Goldi, that payments people don't know how to party. Those people have clearly never been to FinTech NerdCon in San Diego on the 19th or 20th of November. Tickets are available now. And we are still looking for sponsors because it will be like no other show you've ever seen before. But I love that data. You'll be there, of course. Pritpal is a guest and welcome to come along, of course. But the thing that I think has changed is that industry maturity that comes along with it. And that data you shared, Goldi, is super interesting because I keep looking at this chart that shows like crypto prices going down, but stablecoin volume and supply staying static. And I'm like, well, what's happening to all of the stablecoin volume and how's that shifting? It's hard to know what those transactions are for. God bless Artemis and Allium. They've really tried, but it's the best you can do is estimate. But you sort of speak to a Pritpal, you speak to some others, and you're like, yeah, no, we're seeing kindling. It's smaller than the rest of our business, but it's meaningful. I'm going to take a quick ad break here, and we're going to come back to all of that stuff with Pritpal in just a second. Tokenized is also sponsored by Fireblocks. Fireblocks is the stablecoin infrastructure of choice for global businesses, from Visa to WorldPay to Bridge to Revolut. With over $100 billion in monthly stablecoin volume, Fireblocks powers stablecoin strategies at scale with infrastructure that enables PSPs, fintechs, remitters, and banks to issue, move, hold, and manage stablecoins. It's all done securely at scale with secure built-in compliance. With Fireblocks, you get complete control to build your own stablecoin orchestration layer create payment accounts, manage liquidity, and access on and off ramps in over 60 currencies. It makes it easier for you to build and scale and expand your business globally. Learn more at fireblocks.com. Thank you to our sponsors. Pritpal, talk about where you are today. Talk about where Thunes is today. Thunes is, if people don't know, one of the largest cross-border payments companies in the world. But remind people who don't know what Thunes is and give me the top line and then double-click into the stablecoin business for me.
Sure, yeah. So I guess as a top line, we're a global cross-border payments infrastructure provider. So we provide solutions that allow global businesses to accept or pay out. And that's our core offering. And it's all around coverage and a true global network. So it's taken us 10 years to build this network. So we operate across 140 currencies, 90 currencies, 140 countries, 220 payment methods. So it's all around how do we abstract complexity from our customers and integrate with our single API. So that's where we are. That's where we have been. And with me coming on board and just prior to me joining, we've been looking at, first of all, stablecoins as an internal experiment, which is where we started our journey. So how can we look at how we can solve problems internally? And the big move for us was around treasury movements. So we saw the efficiencies we could gain, this whole pre-funding and liquidity trap that I know you discussed on previous episodes. That was where we saw the real benefits. And we started thinking about, well, how can we offer this to our customers? So if you think about fast forwarding where we are today, so our customers now can pre-fund us in stablecoins, so USDC and EURC to start with. That's freeing up some of their liquidity challenges they have. And on the opposite side, I mentioned currently we have payment methods, which include bank accounts, mobile wallets, cards. We've also added stablecoins as another payment rail, and they compare in USDC and USDT. And that is very much how we're framing it from our side. It's another currency type. So we are agnostic of currency types and also countries. And I think what that concept for us is embedding it within our solutions and again, making it simple for our customers to access. And just a little bit of a segue, I think one of the key ones for us for paying out in stablecoins especially is that customers can have the option. They can integrate via an API or actually via Swift. So we've got 1,500 banks already directly connected to Swift, and now it's quite simple for them to use their existing Swift membership to pay out. And that's what we're trying to do, which is meet the customers where they are and where the demand is.
Nice. And by the way, for those who don't know, and Pritpal, I'm sure you know because you've been there for a while, but Thunes is a very interesting company. It started back in 2005 by Eric Barbier, by the way, who used to be here as a guest in our podcast, and he started that company as something called Transfer2, and it went through a lot of different hops along the way. Eric eventually obviously sold that out. He's now the CEO of a crypto company called AAA. And it took Thunes, and I'll tell you, Pritpal, I don't think we met back then, but when I had my company before Fireblocks, that Fireblocks acquired, we were doing payments over blockchain in 2017. This was a time where people did not want to do payments over blockchain. They told us, please go away and leave the premise. And we knocked on Thunes' doors multiple times, trying to convince them to do that. Obviously, it kicked us. Obviously, we came back through the window. That didn't matter. It kicked us again. But in the last 2 years, and correct me if I'm wrong, Thunes sort of said, maybe like a lot of companies, we have to do stable coins. Fine, we'll do it. We'll add something. But then I think it was surprised by the demand and the magnitude of how many people actually want to do pre-funding, how many people actually do want to get paid. Can you tell me something about something that happened in the company internally between what they thought they're launching as a gimmick to what's now a full-pledged department that you're heading the product of?
Yeah, sure. So I mentioned before about solving those internal use cases. I think that was the experiment for us. I think Thunes was, as it always has done, is monitor and keep track of market industry events. And I mentioned that global network we've got. So we have expertise in a lot of these local areas. I think we started seeing grassroots level adoption in some of these areas. And we're strong in these global south and these emerging economies. And we could see actual real world utility use cases now for stablecoins. So naturally for us, we could see our customers, end users, they were demanding stablecoins. So we wanted to be able to facilitate our customers to continue to operate on a global scale. So that was one of them. And also I mentioned from a liquidity challenge, I think, having those 90 currencies and 140 currencies, managing liquidity in all those countries, locking up currency, over some of these volatile weekends, these, extra long public holidays, you can imagine, sometimes the risk we're taking on. So in order for us to actually leverage final on-chain settlement in almost real time, whilst it's still a growing concept and some of our network partners aren't there yet, it's definitely helping us. So that's why I think we saw and seized the opportunity there. And the other thing I would also add is that we now actually have a new set of customers who have started in this kind of crypto native space, whether it's, whether it's actually trading or payments use cases, and now are looking for the other side, which is the realization that at some stage we need to get back into the fiat world. And for them, because they're operating natively in stablecoins, we want to be able to make it seamless for them as well. So they don't need to get out of, into fiat and then come into our world, straight into our world using stablecoins. And we're seeing a lot of demand there, and that's why we're leveraging our network for them as well.
It's so interesting how everybody discovers that payments are not natively global from the crypto world, and from the TradFi world, you have all of this pain of dealing with a currency that can move 10% over a 3-day weekend. And actually, if you can figure out your treasury problem, you'll attract these crypto native clients by being fluent in that, and that's a growing segment. But you can start to solve problems for some of your other customers with some of the products you've outlined. But I think everybody's attracted by the top line sales pitch of better, faster, cheaper. But that cheaper's not always the case, is it? So how do you think about where do you say the provable value is? What's the tangible business case that is usually true about stablecoins for most people most of the time?
Yes, it's a great question, and I totally agree. I think that is sometimes it gets the industry in trouble because everyone assumes it's cheaper. And when you're speaking to customers and it's not, they're a little bit surprised. So I think we can probably do a little bit better than saying it's always cheaper. And then once you price in the off-ramp and the FX, especially in these thin corridors sometimes, it actually can be more expensive. So I think the key thing of that is on-demand liquidity for me. And I mentioned this always on settlement. And also the reach. So we know in certain corridors, the correspondent banking or real-time domestic rails aren't real-time. And that means if you're trying to actually get funds to a network partner to pay out for us to do the FX, there are no alternative options. So actually that's where stablecoins flip that. So not only is it on demand, but actually you can plug that gap as well. So I think it's helping with that liquidity management piece. And I think it does come back to not just the cost side of things, but with the speed, there's other benefits. And I don't think you realize those until you start exploring in this space. And that's what we've seen.
Well, I think both Simon and I have similar views. I mean, Simon always says, stable coins are cheaper, they're better, right? And he actually has a really good article on that on Brain Food, FinTech Brain Food. I usually say, stable coins are not cheaper, they're faster, and if you can capture value from speed. For example, we had in one of our episodes, we were talking with Citi about, trade finance and commodities and how you can actually gain value from paying your exporters faster and whatnot. That, I think, really makes stablecoins the case today. And people should admit that stablecoins feel cheaper because they're subsidized by VCs. And basically, you have tons of these VCs putting money into chains, putting money into companies, putting money, the chains themselves, the blockchains, obviously giving subsidies of sorts because they want to encourage utility. It's all fair. But if you go to now a nascent company that have never seen a stable coin, sometimes they just even expect to make money out of stable coins. And you know what? That can't really be the case all the time. But I hear what you're saying, Pritpal. I do agree. I think, look, let's talk about the products you're building, right? You're building really at this intersection of TradFi and crypto. Thunes, again, not a crypto company, obviously. Now a digital asset native will become such a company. But building at this intersection is hard, right? Because you have the legacy, let's call it, of the fiat world and the compliance and risk and everything about that, and you want to run faster with, embedded wallets for crypto and yield and staking and all these things. Like, how does it feel to be in that specific place? And I guess, like, what's the philosophy behind solving problems when you get that friction?
Yeah, just thinking through that. So if I take a step back and think about it from two different lenses. So I think from a philosophical perspective, I think about where I was before my journey, and I wanted to go down the path of removing all these intermediaries. And there's a little bit of an irony here because at Thunes, actually, we've become a single intermediary. So we are still the intermediary at its heart. What we're trying to do is, again, make it easier for our customers to access that global coverage. So I think what was actually the goal wasn't, getting rid of intermediaries, it was access. And that's what we're trying to unlock here. So I think being a middle person or middle player still serves a purpose, and that's abstracting that away. From the product side of things, I think some of the challenges we've had in this space is still an evolving piece, which is, we work in an industry that's moving very fast. We've got regulation, coming very soon, some clarity. Back in the UK here, we've seen some great announcements and clarity coming soon. The US is obviously pushing forward with theirs. And then from the compliance side, I think that's been quite a key problem as well. And both of those are on a little bit of an educational piece still. So I think we are still early in this industry. We're seeing a lot of traction, but if you think about the global industry, we're still early. And compliance has been quite a challenge in this space. And although the fundamental principles are the same around KYC, you think about how the two different worlds operate, these concepts of travel rule, self-custodial wallets, custodial wallets. It's about trying to merge the two together so it's actually easier for us to operate. And that takes a lot of time to put in those frameworks in place, but we are getting there, and I think we actually have got there. So it's around making sure that from an operational perspective, you're ready for those different types of flows, and that's what we've been working on.
Yeah, when you're regulated, you got all the licenses in all of those markets, and there are markets that are outside Singapore and outside of Hong Kong and outside of the US and outside of Asia. And those markets may even have currency controls, and you might have a license there. So there's so much complexity that your compliance team has to wrestle with to try and do this at scale. I think people underestimate how hard that is. And then you got the new complexities of there's several flavors of US dollar, leased USDC, USDT, new consortia popping up. How do you think about supporting this multi-stablecoin world where, sort of onshore in the US, maybe USDC is more popular, but offshore it's all USDT? But how do you think about that?
Yeah, it's a very interesting question. And I know we've just seen a recent announcement, and I know yourselves are part of that with OpenUSD. And we do work with we have a lot of conversations with issuers who are keen to join our network. For us, again, first we look at the market dynamics and the market demand, and then the customer demand. And for me, it's really working behind the tokenomics and the detail behind how these are actually issued. And there are sort of nuances. And again, you mentioned, right, Simon, being regulated and having to be compliant globally. We have to be very mindful of how some of these constructs are put together. So we know the concept around, yield/rewards. That's an evolving space, and I think it's quite interesting with the OpenUSD announcement. I think it's fantastic, minting, redeeming being zero cost. I think that should always be the way. And with the partners actually receiving some of that earnings from reserves, interesting again. For me, I'm still waiting for a little bit more detail, and maybe you guys will share in due course, but I think it's quite interesting. And then for us, I think from the infrastructure side of things, we've had those 10 years to try to be agnostic from the get-go. So we're already agnostic from the ground in terms of currencies and payment methods. So when we kind of construct and bring in stablecoins, we think about, well, to us, just another partner on our network. The mechanics are different, but we need to think about how it works. And then fundamentally, it's around liquidity again. So if we do bring on a new issuer, a new stablecoin, how do we get in and out of that position effectively? Are there incentives or interest for us to hold that potentially, either for us, for our customers? Or actually, do we need to get in and out of that position as quick as possible? And I think that's the balancing act between utility for our customers versus what we can use as well.
I have to tell you something about intermediaries that regarding what you said before. After I was doing trading, and before I started my Payments on blockchain company back in 2016, 17. I spent a lot of time in Burning Man for like a year running around festivals.
Doesn't
And
show.
so I know, right? And this is why I still get invited to some parties. But anyway, so I was in a conversation about Bitcoin with a Bitcoin maximalist and a professor of finance from Harvard.
It sounds like the
And
beginning of a joke. Like a Bitcoin maximalist and a Harvard professor walk into Burning Man.
and meet a Goldi, right? And meet a bold Goldi. And basically they, someone was the Bitcoin maximalists was saying, we're gonna destroy the banks and we're gonna kill all intermediaries. And the guy from Harvard, he was, he was very calm. I don't know what he took. This was Burning Man, but he was very calm. And he sort of like said, there's a research by Harvard that looked at the last 100 years and look at every technological innovation that came out and claimed that it will kill intermediaries. And it actually showed how over time, there's always a room for an intermediary to, by the way, always take on average eventually 2%, because there needs to be a trust factor that both sides can basically use to transact. And he tried to explain that those are sometimes the financial institutions, right? Now, again, I know Bitcoin white paper, which I have framed behind a lot of Yodas here, is obviously talks about trust, and maybe it will intermediate some things that we have trust in today. But I think it's interesting, like you said, Thunes is probably not going to go away because people want to work with a company like Thunes, right? So anyway, back to your role at Thunes, right? Let's say we're looking 5 years out, right? Where do you see digital assets at Thunes? Is it just like, oh, we had some stable coins here, that was great, now there's a different payment rail because someone else did something else? Or is it a niche from what you're seeing? Or is it like the largest team in the company, right? Like, are you seeing volume and flows being, growing constantly over the next 5 years? Or how are you thinking about this?
In terms of the volume and traction we're seeing, so I mentioned we are seeing increasing customer demand. And I mentioned this new cohort of customers now who are actively looking for a Thunes solution. So I do think we'll carry on seeing that demand. And for me, actually, I think there's net new demand coming our way. So we know more of the real world assets are now being tokenized. So, got money market funds and even, stocks and shares. For users to operate with tokenized assets, they obviously need tokenized money. So now we're in the realms of increased stablecoin adoption. But then again, at some point, although I'm in favor of, a stablecoin native economy, there will be still use cases, especially in the retail world, where eventually an individual, and I come back to the point of, at the end of the day, there is an individual receiving those funds, will need to pay their tax invoice. That's going to be in fiat. Might need to pay an invoice, for rent, for example, in fiat. So there's always going to be a demand for fiat. I think the ratio may evolve, but I think there's always going to be a use case for that. And I think even further out, maybe it's not 5 years, maybe it's 10 years. And I know you guys have discussed this before around, we've seen the agentic economy now. So actually, it's not businesses, as far as our customers are concerned, or the end users, it's agents. And I think they'll be also operating on chain. And again, they'll need wallets, they'll need stable coins to potentially operate on that. But then if they want to come back into the real world, I think they will need to come back to the fiat world. And that's where we see our space. So I think from our perspective, I'd love to be able to say my team will be the biggest and we're going to take over Thunes, but the reality is we're not. And I'm actually comfortable with that because I think if my team is still relatively small, but the volume is still taking off, it means we've served our purpose, which is to become the plumbing underneath how we're actually moving money and settling. And it's not necessarily always around the actual buzzwords we're selling to the market, it's how we're internally moving funds. I think that's going to be the real value for me.
Yeah, the internal treasury stuff, especially as money market funds come on, just looks like a no.
And Simon, he said agentic, and we're letting him fly with it just because he's a guest that we like very much. But Pritpal, we're trying to find the agentic users who are sending 5,000 agents and buying. We still couldn't find them. But no, I'm kidding. I agree. It will be big. Obviously, as a tech person, I believe in that.
It's when, not if, isn't it? Look, I totally buy it too. It's one of those difficult things, though. It's timing these things. And I think, you've been through this journey. You've obviously learned a lot of lessons. I'm curious, Pritpal, what you wish you knew back then that you've now figured out, and the advice you'd give to people building in the space today based on those lessons?
Sure. So two things come to mind. The first one, which I wish I knew, was don't fall in love with just the technology, which I did do. I think you need to fall in love with the problem. So don't worry about the chain, the token, this particular network.
Yeah.
It's around trying to actually solve the problem. And that's the boring work and the hard work, the regulated work. And that needs to be the foundation for everything you do. So I think that's a lesson learned. And scars, I've definitely got scars in that space.
100%. I still hold a bag of Cardano. I'm kidding. No one held a bag of Cardano ever.
Yeah, I also had that dabbling in the meme coin area. And the second one is that I'm remembering that there's the reason why last mile exists and that there's a real person at the end of it again. So I think, again, we might get lost in this, machine to machine payment space, and, it'd be great for the economy, but I think we need to realize that there is someone there. So yeah, build for the problem, not the technology. Never forget there's someone there. And if you get those two things right, I think you can go quite far in this space.
Agree. I think that I want to ask you something about maybe before our last question. Like I've met with one of the product leaders at one of the largest PSPs, and I've been talking to this guy for many years. Not going to mention the name of the company. It was Adyen, and basically Peter told me, their head of product. He said. He said, Goldi, I like talking to you, but you know what? I had enough. I had enough of crypto people who do not come from payments who try to sell me crypto solutions. I need people from payments to understand my pain and help me solve a problem, right? And I think exactly that's what you were saying, Pritpal, that a lot of people fell in love with the technology and lost sight of what we're really trying to solve, which is, problems in payments, how to move value faster, how people can get paid faster, how remittance can move faster. That's what it's all about. And if we have the tech to do it, great. If we have the VCs to subsidize it for now, also great. I'm kidding. This is obviously the real issue, solving problems.
Pritpal, what problems are you solving right now that you think are unsolved? What are you focused on at the moment at Thunes, and what's keeping you up at night?
So we've spoken a lot about liquidity optimization. So for me, it's Onchain FX and liquidity management. So what I'm trying to solve is, we have 220 network members at the moment. We've got a lot of strong and good partners that we use at the moment to reach that global presence. What I'd like to be able to do is fund every single corridor with the option to have stablecoins as a pre-funding or funding mechanism. That's still quite small as a percentage where we are today. So one of the things I'm looking at is how do we unlock that? So working with our partners, working with some of the players in the ecosystem, how can we work together to optimize and get those efficiencies? So I'm always constantly thinking about, again, regulation. A new regulation pops up. That's something we saw P-Vara come up a little bit out of the blue. But great to see. So it's always thinking ahead what's going to come next and be prepared so we can pivot very quickly. And that's what's keeping me up at night, I guess.
Yeah, liquidity is such a real problem. It's the thing that 24/7 sounds like it should solve, and yet somehow it doesn't. It's such an issue, isn't it? Goldi, any final thoughts before our closing question?
No, I think Pritpal hit all of the major topics we want to talk about. I think Pritpal, really, thank you. And I'm going to ask the last question, which is, the question we ask everyone. I wonder what your response will be, because maybe you'll tell me about something I'm not considering. But 20 years from now, right? Are we still talking about stablecoins? Are we talking about something else? Were they just a story, or are they now a fact?
They will become a fact, in my opinion. I think it will be part of a bigger picture, though. So I think it won't be the only form of tokenized money. So we've seen tokenized deposits. We know CBDCs may launch soon. So I think volume will continue to grow. I think there'll be a high usage, as we've already discussed on the show, around treasury management. I think that's where most of the volume will be. I'm fascinated to see where this agentic economy actually ends up. I think you're right, Goldi. We don't know who's actually sending these payments just yet. But we can see where the economy is heading. There's investments in this space. I think it's
get
inevitable
there.
that we'll get there. So I think machine-to-machine payments, if they are run on stable coins, then it's going to be the preferred method of transacting. So definitely think it's going to be the future.
It's going to be more than a story for the sure of it. All right. Well, listen, I want to thank you so much, Pritpal, for being on the show. And I want to thank everybody for watching and listening. If people want to find out more about you and Thunes, make their liquidity a little bit more optimized and 24/7 and pay out to more markets in a way that's faster, then how do they do that?
So you can reach me personally on LinkedIn, and Thunes, you can hit us up at our website. And we also got quite a bit of a presence on our LinkedIn as well. So quite frequently publish some good articles there as well.
Goldi?
I'm at Rand Goldi on LinkedIn, on X. You can also find me on ICQ at 803-1026. That's my number.
Old school, I respect it. You'll find me on all of the socials at SY Taylor. You'll find me screaming into the void at fintechbrainfood.com and, of course, over at tempo.xyz. And you'll find a lot more of this show if you subscribe. And if you want to say thank you, leave us a review. That's what makes the biggest difference for us. Catch you next time.